Welcome back guys, my name is Angelo and today I want to talk about what I'm buying in 2023. More precisely, my investment strategy for the year, which I've already been sticking to in January. You'll find out exactly how my wife and I are allocating our after-tax income into 3 different investment buckets every month. And while I think we can all agree that 2022 was a very bad year for investors, I believe 2023 will be a lot better. And I'm not just saying that because my ETF portfolio is up substantially over the past month. Don't get me wrong, it's not going to be easy. There are still plenty of uncertainties, like the still ongoing war and the monetary policies across the world, with the ECB and the Fed raising interest rates to levels that we haven't seen in a long time. But that's exactly why I think this will be a great period to dollar cost average into different assets. Okay, in our case it's more like euro cost average, but sadly that doesn't sound as great. Even though I think we could still be in for a bumpy ride, I am bullish about 2023 as a whole. Like I've done in the past 2 years, I'm also going to share my predictions for what returns I'm expecting from each asset class in this video. But before I get into it, don't forget to subscribe if you'd like to see more videos specifically for European investors. And if you'd like to support me, feel free to use my links down below in the description to anything that I mention in the video. And please remember that none of this is investment advice. I'm just sharing my own opinion based on my personal experience as an investor. So, here's how my wife and I are planning to invest our after-tax income this year. We of course still have to subtract our monthly living expenses from this as well, but luckily those are pretty low. Even including our 3-month-old daughter, the 3 of us usually don't spend more than 1,300 euros on average per month. And just so you know, in addition to our investments, we like to keep about 6 months worth of living expenses in cash on our bank accounts. That's simply for emergencies and peace of mind. Also, I'm self-employed, so I need to keep higher cash reserves for upcoming tax and social insurance payments compared to an employee. Having said that, we're following a simple 80-10-10 investment strategy in 2023. 80% is going straight into low-cost passive ETFs, enabling us to invest into a large basket of diversified stocks from all across the world. Here we don't need to make any decisions on which stocks will perform best, which ones are overvalued, when to sell, etc. We're planning to hold our ETFs long term, ideally forever, and to only sell some shares when needed to fund our retirement. Our ETF investment strategy couldn't be more simple. We only buy a single ETF, no matter what the market is doing, every single month. The accumulating Vanguard FTSE All-World covering 3,740 stocks from the entire world, including emerging markets. Based on over 100 years of stock market history, we're expecting long-term returns of about 7% per year on average from our ETFs, with a lot of ups and downs in between. For my wife and I, ETFs are the main pillar of our investment strategy. We're not planning on touching these over the next 10 to 15 years or more. They're also part of our retirement fund for when we get old, since the current pension system in most countries in Europe, including Austria, which is where we live, is clearly unsustainable. Additionally, we consider hard assets like stocks to be a good protection against higher inflation or even periods of hyperinflation, as was the case in Germany between 1920 and 1924. You can find the low-cost brokers that I use to buy ETFs on a monthly basis linked down below in the description. Now, while I obviously don't have a crystal ball, so I can't look into the future, here are my return expectations from my ETF investments in 2023. I think we'll still see a lot of volatility, maybe even a correction of 10 to 15% in between, but that will end 2023 with a return of 9% for the year. Still, precisely because of all the uncertainty, some of which is priced in, I do think this is going to be a great year to dollar cost average into the market. So to buy shares on a monthly basis, no matter whether the market is up or down. At least that's what we're doing. The next 10% of our investable cash will be going into peer-to-peer loans on different platforms and marketplaces. These usually pay interest rates between 10 to 15% per year. But with interest rates that high, they're clearly not risk-free either, even if a loan is offered with a buyback obligation by the lending company. To reduce this risk as much as possible, I try to focus my investments around loans issued by lending companies with solid financial statements. Peer-to-peer lending as a whole has been part of my investment portfolio ever since 2018 because I appreciate that the sector is relatively uncorrelated to my other investments, providing me with some extra diversification and because of the high monthly cash flow. The 6 P2P platforms that I'm planning to add money to this year are Ascatit, simply using the diversified strategy, Mintos, where I'm primarily investing into lending companies with a rating above 7, Robocash, Lande, Via Invest, and Income Marketplace. Last year I had Lender Market at the top of my list as well, but until CreditStar repays all Mintos investors and stops extending loans on Lender Market, I'm more likely to withdraw my funds than to increase my account balance. As for my return predictions, based on my yearly returns in 2021 and 2022, I'm expecting a 9% return from my investments in P2P Lending in 2023. The last 10% of my investable cash on a monthly basis is what I'm willing to speculate and take the most amount of risk with. However, I don't like to speculate with single stocks the way many other people do, as in my opinion it's almost impossible to outperform a low-cost broad ETF over a long enough time horizon like the one we buy on a regular basis. That being said, I've had a lot of success with my crypto investments ever since 2017. Even with all the painful crashes since then, I've been able to take out my initial investment several times over, which I then moved into my core ETF holdings. And while 2022 was a massive disappointment for the sector, making me rethink whether or not I should ever talk about crypto again on the channel, I want to be open and transparent about what I'm doing. So here we are. So, you probably guessed it, the remaining 10% of my monthly investments will be going into the two largest cryptocurrencies, Bitcoin and Ethereum. I'm aiming for a 50-50 split between the two. Among them, I believe Ethereum has the higher upside potential, but also carries more risk. I'm using a single exchange to buy these every month, Bitpanda, which is based and regulated in my home country, Austria. With crypto, it's extremely important to choose an exchange you can trust, especially after what happened last year with FTX. All assets on Bitpanda are 100% backed, which is further validated by the auditing firm KPMG on a regular basis. In addition, crypto assets are segregated from Bitpanda as a company according to Austrian law, meaning that even if they were to ever go bankrupt, they still belong to you. This is not necessarily the case on other exchanges, even if they're based in the US, so it's important to keep this in mind. Another reason why I'm using Bitpanda is that there are no fees for euro deposits or withdrawals, and that you can even set up automated savings plans to buy whichever amount of crypto you want on a regular basis, with the minimum being 25 euros. Just be aware that when you buy on Bitpanda directly, you pay a premium of 1.49% on top of the current market price. I think for a savings plan it is worth the convenience, but if you want to buy something directly and pay zero fees, here's a little pro tip. After depositing euros to your Bitpanda account, go back to the login screen and choose Bitpanda Pro. You can then click on deposit to transfer over the funds from your main Bitpanda account. And here you can buy up to 1000 euros worth of crypto every 30 days without paying any fees at the current market price. And even if you're above that amount, you only pay 0.15 or 0.25% in fees respectively, which is quite a bit lower than the standard 1.49% using the main Bitpanda interface. And once you're done on Bitpanda Pro, you can move any funds, cash or crypto back to your main Bitpanda interface as well without paying any fees. So yeah, that's where the last 10% of my investable cash is going on a monthly basis in 2023. A 50-50 split between Bitcoin and Ethereum using the Bitpanda exchange, which you can also find linked down below in the description. I'm fully aware that this is by far the most speculative part of my portfolio, but I'm willing to risk 10% of my monthly investments on it. If you're considering allocating a small percentage to crypto, like Bitcoin or Ethereum as well, please make sure you never invest money that you can't afford to lose. And here are my return expectations for these speculative investments. And remember, last year I was completely off. While both of them have performed exceptionally well so far in January, I think Bitcoin might finish 2023 at a price of around 35,000 euros, which would be a 120% return for the full year, but still below its high of 59,000 euros in 2021. And I expect Ethereum could double from here to around 3,000 euros for a yearly return of 170% from start to finish of 2023, still finishing quite a bit below its all-time high of 4,200 from November 2021 as well. I don't think we'll be seeing new all-time highs in the stock market or in crypto yet this year, but I still think we could be seeing a nice recovery. Let's check back in a year and see if I got anywhere close with my 3 predictions or if I was completely off. And in that case, hopefully because the markets perform better, not worse. There you have it. Now you know exactly how I'm allocating my money this year. And just to reiterate, please don't take any of this as investment advice. I'm just openly sharing what I'm doing with my own money. As usual, you'll be able to see how well or badly I'm doing on a monthly basis on the channel. What investment strategy are you following in 2023? And what do you think about my return expectations for the year? I'd love to know down below in the comments. Before you take off, don't forget to subscribe for more videos specifically for European investors. And if you'd like to support me, feel free to use my links down below in the description to anything that I mentioned in the video. Thank you guys so much for watching, and until next time.